Glad to stay with us. The Nigerian government's proposed tax reforms have ignited a nationwide debate. While the reforms aim to streamline the tax system and boost revenue, they have also raised concerns about their potential impact on various stakeholders. In this interview, we'll delve into the key issues surrounding the VAT reform, particularly the proposed changes to the revenue sharing formula. We'll examine the government's rationale and address common concerns raised by stakeholders. To do this, I am joined by Abiodun Kayode-Alli, Economist and Senior Manager, PwC Nigeria. Thank you, Kayode, for joining me today.
Yeah, thank you for having me, Petra.
All right, I wanted to start by demystifying the controversy around the value-added tax. Number one, there are disputes over VAT administration between some states and the federal government. And here they're looking at, who should collect it. And this, of course, has resulted in some landmark judgments and pending court cases. For the committee thinks the federal government should continue the collection. That's number one. Number two, the reform also seeks the discontinuation of all consumption taxes other than VAT. And of course, the third one, which I think is the biggest one, is the basis of distribution. But I think we'll come to this later. Now, I want us to address the first one. Do you think the federal government should continue the collection of VAT, and why?
All right, thanks. Thank you so much, Petra, once again. And that's a very sensitive topic, like you rightly said. So, given the fact that VAT is actually value-added tax, it means that for every stage of production, right, every value that you add to production process, either a supply of a service or a good, for every stage that you add or value that you add, you should actually charge a certain tax. That's what the VAT represents. And given the fact that I'm sure you agree with me that sometimes you might begin your production in probably a particular location, probably Lagos State, and you might actually do the supply in maybe Ogun State, and the final consumption might actually take place in maybe Kaduna State, right? Given the fact that it involves different processes and it can involve different locations, it would make it a bit difficult and a bit messy if different states are applying their own rates. And there is also a challenge on how to claim what I would call or what is called an input VAT. So the way the VAT system is designed in such a way that for producers, because they are part of the production process, they ordinarily should not be bearing the costs, right? The cost should be the final consumer. So VAT is a consumption tax. The final consumer should be paying the VAT. So the question then is, how do producers now begin to collect part of the VAT they've suffered at each stage of production? So if you think about the whole process I've tried to describe, you will see that it can be a bit messy if states are actually left to administer it, right? And that's why it's best for it to be centrally administered, as we have in certain jurisdictions, right? We have jurisdictions where it's actually done at the federal level. So that's why it's advisable that the federal is collected at that level. And if you look at our current constitution didn't give room for it to be done centrally, right? The current constitution actually made it in the hands of the states, right? Which can be a problem. And that's why, like you said, we've had legal issues where states were actually taking the federal government to court about who should administer these taxes, right? So I think it would be more efficient if the federal government does the collection, takes its cost of collection, and then distributes the amount that has been collected to the other states. So that's my thought with respect to who should collect it. Then the other question you asked, I know you also made reference to the distribution, how it's being distributed, which
Exactly.
seems to be like the major issue now for some states, right? So the current distribution model actually says that let's 20% of the VAT that is being derived, let the states that derived it actually be the ones to get it. Then it goes on to say that let 30% be distributed to states based on population, and let the balancing 50% be distributed based on equity, right? Let it be distributed equally. And the reason why the proposal is now moving it from 20% to 60% in the proposed bill. And I think it makes a lot of sense. It's just a way of pacifying the states that probably want to go to court, right, and seek ruling for VAT to be collected by the states. It's just a way of pacifying them. Okay, why don't you just take 60%, right? Given the fact that the federal will be more efficient in collecting, you then take 60%, then 20% should be based on population, 20% should be based on equity. But one other thing that the proposed bill seeks to do is to ensure that we get rid of some bias that we have in the existing legislation, the existing VAT legislation. So the way VAT is being administered, or the way VAT is being filed by companies, is done in such a way that companies, they have their headquarters. Their headquarters are the ones who are actually responsible for filing the VAT, right? And they file it where those headquarters are located. Now, given the fact that most companies have their headquarters in Lagos State, you see a situation whereby most of the VATs are actually being filed in Lagos State, right? Despite the fact that those items might not have been consumed in Lagos State. So that was some certain benefits that the Lagos State government is enjoying. All right. So based on the new proposed bill, what we will then see is that VAT should actually be derived based on where the items are being consumed, right? And that's the way VAT is meant to operate. So it will now be based on consumption, right, and supply, which makes more sense, right? So these are some of the anomalies that are going to be corrected. And one other thing that the proposed bill seeks to do is to reduce the percentage contribution. So in terms of states, right, between the various levels of government, states, local, and federal, the current legislation proposes that the federal retains 15%, the states share 50%, and the local government share 35%, right? But the proposed bill is now trying to reduce what the federal is collecting from 15 to 10. So the 5% extra will now be shared equally among the states. So
right.
There are a lot of things that are being done just to appease the states. So in my own thought, I think it would be a good idea for dialogue, right, for the state governments, right, to dialogue with the federal government on these bills. And the honest truth is that no law is perfect, right? But there needs to be that stakeholder engagement, and there will be disagreement until a consensus is finally reached and everyone becomes satisfied. I hope that addresses the questions you asked, Perpetua. I don't know if I left anyone outstanding.
All right, so your answers will definitely prompt more questions. Talking about, this issue of remodeling, where it has been imputed. Now, the tax reform is proposing a different model of derivation, which you talked about, and that's supposed to attribute VAT to the place of supply and consumption, rather than the current model, which of course attributes it to the state where it is remitted, which of course favors states with company headquarters. Don't you also think this will be chaotic? Because if we're moving away from what we think is chaotic and we're moving to another one that might also be chaotic, I mean, how do we address all of this?
Yeah, thank you. And that's a very good question you asked. So the brilliant thing about the other bill, the tax administration bill, the Nigerian tax administration bill, is that it kind of gives references. It kind of provides on how filings should be done, how registration should take place, how filings and assessment of taxpayers should be done. So the information being supplied by the suppliers of these products on their invoices, the information can actually tell you where the supply took place. The information would also contain where consumption took place. So the thing is that manufacturers and suppliers of products, they have all this information on hand, whether it is even if it's a non-resident supplier, they have information about who are the consumers of their products, right? If it's a physical, a good supplier, he has the information of where the market is supplying. He has information of the places where these items are being consumed. So all this information would be put in place at the point of filing. So that information is actually available. It doesn't cause chaos in any sense, and that's the good thing when we now have our taxes being administered centrally as opposed to it being done on a state level. So there is actually room for coordination and order. there's actually room for that coordination and order based on the information supplied by the supplier of these products.
Right. So at the end of the day, it seems to me that there is no incentive whatsoever for states that have made, maybe states that have sort of industrialized, because at the end of the day, there is a reason why certain people are moving to certain states or some states to set up their companies there. So at the end of the day, these states probably will not have to benefit anything from that. Isn't that what it looks like?
Actually, the reverse is the case. Actually, they will actually benefit a lot, right? So one thing we must realize is that the more economic activities take place, the more consumption takes place, the more value-added tax you have to pay, right? So it's rather an incentive for you to increase activities. So, and I'll give you an instance. So if a manufacturer of a product actually situates itself in a particular place, that manufacturer of the product is going to require inputs, right? It's going to require certain inputs, and as it's consuming that input, there will be VAT that will be paid, right? And even as it's consuming the inputs, as it supplies to its markets, right, there will be consumption taking place. At that level also, there will be VAT that will be paid. So the more you're able to stimulate consumption of activities, the more you're able to stimulate supply of activities, there will be an increase in consumption. There will be value-added tax that will be derived by that state. And that's why it's even going to be encouraging for states to begin to promote economic activities in their region and make that region conducive. And even beyond the VAT, right, even beyond the VAT, in terms of personal income tax, the states do collect the personal income tax. So as more as these companies, as more as these organizations, as more as these sectors are employing people in those areas, they are also giving room for personal income tax to be collected by the states, as long as those individuals meet the threshold for taxation of income. So the idea in the long run is just promote economic activities, right? And I do admit that you might begin to think that for some certain states, depending on the level of economic activities, if the economic activities are informal or if they are activities that do not generate VAT, probably because those activities are VAT exempt or those activities are zero rated in terms of VAT, the expectation is that there will be a kind of consultation on how those states can still, or those regions can still benefit from the same VAT allocation, right? So I think that's where consultation needs to be done. So I think it's the idea generally in the long run is to benefit all states equally. Yeah.
All right, so there's something I want us to look at now, and that is the derivation under the new model, which of course is supposed to account for 60% of VAT distribution, and they say this is for better equity and to also discourage any state from seeking to administer VAT as a state tax. Now, I'd like you to help us unpack this. I know you mentioned it earlier, but I want us to sort of understand. So when we're saying 60% derivation and then, some of the percentages, what are we actually talking about?
Okay, so let's start with how the VAT is going to be collected under the proposed bill. So under the proposed bill, for every VAT that is collected centrally, the expectation is that the federal government would retain 10%, right? Once the federal government retains 10%, then you have the outstanding 90%. So the outstanding 90%, it's going to be a case of 55% for the state and 35% for the local government. Now, of the 55% and the 35%, it's now expected that the states that generate the economic activities that led to the creation of VAT, those states would now get 60% of their distribution. So they will retain 60% based on the derivation, right? So they will keep back the 60%. Then the outstanding would now be shared across states based on population and also based on equity. So that's the way it's meant to work. And the reason why this is being done is just to encourage the states, right, to see it as more of a fair way of allocation. If you consider the fact that there is currently a case, right, there's currently a case between the federal government and Rivers states, and which is also joined by Lagos states, right, whereby they are trying to seek who has the right to collect tax and VAT, right? It's currently at the Supreme Court. If you look at the circumstances, it looks like there is a high chance that the states might get it, right? Because, like we said, the Constitution doesn't give room. The Constitution didn't provide room for the federal government to actually collect or administer this, right? So it might actually go up to the states. But if you then find a situation where the states begin to administer this, because of the complexity around value-added tax, it would be chaotic, right? So currently we have states that are currently administering consumption taxes, and there is also the VAT being collected at the federal level and the consumption tax being collected at the state. What this simply does is that it's actually increasing the price of those items that are being consumed. And given the fact that we're actually in a high inflationary environment, it doesn't bode well for consumers, right? So at this point in time, what is expected is a kind of central coordination, cooperation among different levels of government, right? So simply put, what it simply means is that the states need to be appeased, and the best way to appease them is to give 60% to the states that are actually responsible for deriving or expanding those economic activities. That's what I was trying to explain early.
That's okay. Right. Now, I want us to talk about pay, quickly. What necessitated the review of the existing structure? I mean, we're saying a review. So talk to us. What are the proposed exemptions? And, who is paying more or less? Looking at the pay.
Yeah, and that's a very good question. So I think one is to, first of all, look back at what the bills are set to do. The bills generally are set to simplify tax laws and also help the government. It helped the government and also help taxpayers, right? Exempting a lot of individuals who probably are not earning much, right? Reduce their tax burden. That's one of the things the bill seeks to do. So with respect to the personal income tax, if you look at our current structure, there is a maximum, there is a certain threshold beyond which if you earn greater than that amount, right? And I think the amount currently is about 3.2 million. So if you earn more than 3.2 million in a year, right, the maximum tax you will pay is going to be within the range of 20% if you're earning more than 3.2 million in a year, right? So what this structure is simply trying to do is to modify it to raise it to 50 million, right? But even as it does raise it to 50 million and it taxes them at, I think, a rate of about 25%, right? Even as it does this, there is a lot of exemptions for low income earners. So under the existing personal income tax structure, the scale, you have a situation whereby if someone is earning an annual income of about 300,000 naira, that person is still required to pay a certain amount of tax. All right, even if you are earning 300,000 naira. But under this new structure, you see a situation whereby if your annual income is about 800,000 naira, your income is actually exempt, right? So this then leaves you to it then makes people who are earning, like your slide showed, people who are earning within the range of 1.7 million and above, those are the ones who would experience a slight increase in their tax payable. And the more you earn, right, the more taxes you pay. So this is what is referred to as a progressive tax system. And that makes a lot of sense considering the fact that we have lots of individuals who are earning millions and what they're paying is actually quite small. If you look at developed countries, advanced countries like the United States of America, if you look at like the United Kingdom, where you see all these footballers, right, where you see all these stars and celebrities, they are expected to pay lots of taxes, except they are looking for systems to kind of reduce their taxes, right? Avoid the taxes they pay, right? And they try and restructure their tax systems. But in these advanced countries, the more you earn, the more you are meant to pay taxes. And the truth is that we have lots of infrastructural deficits, right? And where can government get this money? It's from the taxes you pay. So if you pick South Africa, for example, which is a key region where you see most of the taxes that are being generated, it's coming from personal income taxes, right? And you can see the level of development that takes place in those regions. And you have that situation whereby a lot of individuals who are not earning much, they are totally taken off from the system. They enjoy lots of those exemptions. Okay. So it's a similar approach that this bill is actually proposing. And I think in the long run, we see a situation whereby a lot of our high income earners who are actually not paying taxes, I'm sure you know them in your mind, right? It actually captures them and brings them to the tax net where they have to pay their own fair share of taxes. We don't want situations whereby a lot of these individuals are finding ways to avoid paying taxes. They should pay, right? And the government needs the revenue
High net worth
at this point in time.
Absolutely. Thank you so much, Abiodun Kayode-Alli, for sharing your thoughts with us. I mean, I would have loved you to tell us which is more damning, tax evasion or, fiscal profligacy. But of course, that's conversation for another time. Thank you once again for coming on the show.
Yeah, thank you for having me, Perpetua.
All right.